Hey everyone, how's it going? Hope everyone's doing fine. So the largest IPO in India's history is just around the corner, and here are a few factors which you should know that would help you in making a wise decision as to whether you should go ahead and invest in the IPO or not. So starting off with India's demographics, India has the second largest population in the world after China, and when it comes to how young that population is, it's ahead of major economies such as US, China and Brazil. So as of 2020, the median age of the population of India was 28 years, and as per CRISIL, by 2031, it is expected that 88% of the population would still be under the age of 60 years. That results into India having the largest, youngest population in the world, and it will most probably continue remaining so in the coming decades. Now coming to the per capita income of India, India's GDP growth projections for the financial year 2023 is expected to be around 8 to 8.3%, and India would continue to remain one of the fastest growing economics in the coming 10 to 15 years. So if I combine that with the young population of India, that would mean that enough job opportunities would be generated, and because of which the per capita income of the population would also increase. And hence it has been predicted that from 2021 to 2025, the per capita income of India would increase on an annual basis by 6.2%. Now these two factors works in favor of any industry, but particularly for the insurance industry, because this industry works in favor of a younger crowd and a crowd that is working. So in terms of Indian economy, it looks good in the coming decade when it comes to the insurance industry. So let's now talk a bit about the insurance industry in India. Now when it comes to the market penetration of this industry, that is how many people are actually covered by insurance. If I talk about premium as a percentage of GDP, that's only 4.2% in India, and hence there is huge scope for this market to expand in the upcoming years. Now when I talk about the financial inclusion in India, that is how many people are actually part of the financial system, that is they have accounts in banks or financial institutions, that percentage is also very less. Now the government has launched various schemes and initiatives over the past few years, and they keep doing so that financial inclusion of people increases, especially in the rural areas. And this paints a positive picture down the line, because even digitization has got a huge boost, especially after demonetization. That would also help in making people a part of the financial system in India, and hence they would end up becoming a part of the insurance sector as well. And the last point which I want to talk about is the internet penetration, because like I said, digitization would help to improve both the financial inclusion and insurance penetration in India. So CRISIL predicts that by 2025, 75% of the Indian population would be using the internet, and by 2025 4G would also become the primary data service, so the internet speed is also expected to increase. And with smartphones getting cheaper and with cheaper internet services, the internet would reach the rural areas as well, and that would also help them become a part of the insurance as well as the financial system in India. Now all these three factors combined again shows that there is huge scope for this industry in India down the line, and whichever player gets to leverage this scope, they would be able to hugely grow in this particular segment. Now that we have talked about India and the relevant industry, let's now talk a bit about the company in question here, that is LIC. LIC is a fully owned government company that has been providing life insurance services for the past 65 years. When it comes to the market share of this company in India, in terms of total gross premium collected, LIC has a share of 61.4%, and in terms of number of individual policies that have been issued, its share is 71.8%, and the same is 88.8% for group policies. So clearly it is the largest life insurance company in India when it comes to its size and the market share. Now one point to note is in 2016 LIC had a market share of 72%, and that market share steadily kept declining over the years, and it kept losing that to other private players. And in 2020 it landed up with a overall market share of around 64%. Now this happened because LIC has majorly been an agent-driven company, and it operates mostly offline, that is, agents go to people's house and then they sell those policies. But times are changing with the increasing urbanization of the Indian population. That is no longer the case now. And when I talk about the other private players, they are mostly backed by banks, so they have tie-ups with banks through which you can get the policies of those companies, but that is not the case with LIC. And also when it comes to the digital initiative, these private players are much more stronger in that aspect, that is their digital presence and the way they onboard customers or the way they operate online. They are far better when it comes to LIC. And since these are private players, the way they operate, it's much more efficient, because they have a hunger to succeed, they have a hunger to remain profitable, they have a hunger to compete with others. But that is not necessarily the case with LIC, because they are government owned. So that's a disadvantage which LIC has, and I guess because of that its market share has fallen over the years, and it will continue doing so as more private players keep entering the market. In fact, even companies from outside can enter India in the insurance segment, because the government has allowed 100% FDI in this particular area. So it has to be seen in the upcoming years how LIC copes up with the competition that comes up. So now let's talk a bit about the product portfolio of LIC. So when it comes to products, it's very diverse. LIC has different kinds of insurance, investments and saving products, and in fact few of the government policies can only be bought through LIC. But having said that, the structure of LIC, considering it is a life insurance company, is not something that I like. So what do I mean by that? Now I made a separate video as to how one should approach life insurance, and in that I discussed that pure protection plans or term plans are the ones which are best from the customer point of view. Now, but when I look at LIC's product portfolio, these kind of plans occupy a very small percentage, because majorly LIC's plans are divided into two types, that is participating and non-participating. Now the participating plans are the ones wherein LIC would return any profit that it makes from its policy back to its consumers in the form of bonuses, along with the guaranteed amount obviously. And the non-participating plans are the ones wherein consumers would only get the guarantee amount, they would not get the bonus. Now the participating plans occupy around 70% of its overall products, and the non-participating plans occupy 30%. And within this non-participating category, a very small portion goes to term plans or pure protection plans. So this is where I feel there is a problem when it comes to its product portfolio, because information is available everywhere nowadays in terms of the digital age. It's no longer the case wherein an agent goes and tells you to buy something and you blindly go ahead and do that without doing any research on your part. So this could become an issue down the line for LIC unless they change this, because from the customer point of view this is not much beneficial. It's never a good idea to combine insurance with investment, because this affects both the returns that you get and also the premium that you end up paying and also the coverage amount. So in today's times, when there are fintech companies all around and it's so easy and seamless for everyone to invest in stocks or mutual funds or even in stocks outside India, and as the financial literacy of people increases, they may not be willing to combine these two areas, which most of the LIC policies tend to end up doing. If you want to know in more details about this, you can check out the video which I was talking about. But yeah, down the line, unless LIC changes this could end up becoming an issue for this company. Now let's talk a bit about LIC's strengths. So the biggest ammunition that this company has in its kitty is its brand name. This is a company that has been in existence for more than 65 years, and LIC as a name has become synonymous with insurance. So to the extent that when someone wants to do insurance, they end up saying, do you want to do an LIC, not insurance? So that's how strong the brand name of LIC is. And combine that with the fact that this is entirely backed by the government, this increases the trust that people have with this brand by a lot. And trust as a factor is hugely important when it comes to insurance. So this is something that LIC has built over the years, and no other company comes even close when it comes to the trust factor that LIC has associated with itself. Also, one factor that comes into the picture is LIC's distribution network. Now, since LIC has majorly been an agent-driven industry, its agents have reached places where other companies had found it quite difficult to do so. If you go to the rural parts of India, almost all the insurance policies that you could find there are that of LIC, because the people in the rural area are not proactive when it comes to insurance, and that's where the agents come into the picture. They have been doing this for the past several decades, and the distribution network which LIC has established is huge when it comes to the other players. They are there in every nooks and corners of the country. Hence, when it comes to future prospects, LIC has all the ingredients that it needs in order to remain a major player in this industry. A suitable population, sufficient scope for growth in the insurance sector, increasing financial inclusion, LIC's own distribution network which is unparalleled when compared to other players, and obviously the brand value and people's trust. It all depends on how it chooses to leverage all these factors and change with the times and with the competition as the years go by. Now all these factors talk about the long-term prospects of LIC, and that is exactly how you should look at this IPO. Since this is the largest IPO in India so far, if you want to take part in it, you should look at the prospects of the insurance industry and the prospects of LIC long-term, and if you find it favorable, then you can consider taking part in this IPO, or you can wait it out and see how the company performs based on the criteria which I discussed here, and then you can go ahead and invest in its shares. Now these are the IPO details of LIC which you should know about. The government is selling off 3.5% of its ownership and raising 21,000 crores through this IPO. Out of the total IPO, 10% is for the policy holders. The price band for the IPO is 902 to 949, and there are discounts also which is available. So for retail investors and employees, a discount of 45 is available, and for the policy holders, a discount of 60 is available on the price. The lot size for this IPO is 15 equity shares. the maximum investment for the retail investors is 14 lots. So the maximum investments we can do is 1,99,290, and the minimum investment is obviously for one lot, which comes down to around rupees 14,000. The opening date for the IPO is on 4th May and it will remain so till 9th May, though the IPO is getting opened for the anchor investors from 2nd May onwards. If you get allotment for the shares, it will be allotted to you on 12th May, and the same will get credited in your Demat account by 16th May, and the company plans to list its shares on the stock exchange on 17th May. I hope you got some information about LIC and the insurance industry from this video that would help you in making an informed decision when it comes to this IPO. To check out how you should approach life insurance, go ahead and click here, and to find out how you can invest in stocks in United States, go ahead and click here. That was it for this video, and until the next one, take care, see you, and bye-bye.